Greetings, students. This is Balakrishna again from BALAS Accountancy Special Classes. Well, today we are taking up final accounts or financial statements. Okay. Before I give you in detail, let me explain in a nutshell what is final accounts all about, what are the components of it, using this very whiteboard behind me. Well, any organization would like to know what is the profit during the year, or for that matter, at any particular time. Okay, let's assume at the financial year end. That is done through trading and profit and loss account. So it has got trading as well as profit and loss account. So what is the difference between trading account and profit and loss account? Trading account, we get the basic profits, gross profit. That is nothing but opening stock plus purchase and purchase expenses minus closing stock. This section, opening stock plus purchase expenses. I'll get back to what is this purchase expenses or direct expenses all about. Just say, for the moment, just keep it in mind. Purchase expense is nothing but a part of purchase. So let's assume that opening stock plus purchase expenses minus closing stock. That is called cost of the goods sold. Simple example. I had 5 lakhs opening stocks. I purchased during the year 25 lakhs. Now I should be having 30 lakhs in my godown. At the year end, I find I have got a closing stock of just 2 lakhs. So what happened? 30 minus 2, 28. That got sold. That's the cost of the goods that has been sold. Actually, we will sell it at a profit. Now, let's assume it has been sold for 35 lakhs. So 35 minus 28 lakhs, 7 lakhs is the gross profit. Simple like that. This is the concept of a trading account. Okay. Now you may say, why this direct expense or purchase expenses has to be added to purchase, or why should come this side? Well, you purchase something paying rupees 1 lakh from a particular place. You have to spend wages, transportation charges, everything for another 5,000 rupees. And on reaching the office, a little more modification extra you have to do to make it in a saleable way. Another 10,000 rupees. So overall, you are incurred 1,15,000 rupees. If somebody asks you, can you give this for 1 lakh? You won't give it. You will say, my cost itself is 1,15,000. That's what all about. That's a plain concept about it. Okay. So in detail, certainly I'm giving you in the sharing session what's direct expense all about. For the moment, just take it. Purchase and purchase expense is one and the same. It has got the same status. So practically, opening stock plus purchase minus closing stock is cost of the goods sold. And when I compare it with my sales value, the difference is called gross profit. It can be gross loss also, but let us not go to that one. Let's just take it is a gross profit. Okay. So gross profit is ascertained through this trading section of the trading and profit and loss account. Mind, you have to write here for the year ended. Why it is written for the year ended? That means during the year, all the activities has resulted into this one. That's the meaning of for the year ended. Now, gross profit is not my final profit. I have an office, I have administrative expenses, I have selling and distribution expenses, I have miscellaneous expenses like interest, etc., commission, etc. These are also to be charged to this gross profit. Then only I'll get the final profit, is it not? That process is done through this profit and loss section of this account. Once you are written here, trading and profit and loss account, again, you need not write here profit and loss account. It's implied. So gross profit first you will bring down here. By gross profit, you will bring down in the profit and loss section of this account. Thereafter, how will you go about it? My students, I should have told you initially itself, which I missed. I'm telling you how you have come to this stage, preparation of final accounts. From the grassroots level, you think you have journalized a transaction. Journal entries have been posted to the ledger. Ledger has been balanced. Balances have been extracted, and if you have done a proper job, you will get a tally trail balance. So that tally trail balance is there with you. It's the basic document you have got before preparing a final accounts. However, there will be certain other adjustments also you have to do. That adjustments entry in detail I will tell you later on. For the moment, only one adjustment entry, that is nothing but closing stock, I will be taking up in this session. Okay, right. So you have got a tally trial balance. From the tally trial balance, all goods related item you have shown here in the trading section. And the left out item will consist of all three varieties of accounts. What are all those? Nominal account, real accounts, and personal accounts. In that one, each and every nominal account you will pick up and show in your profit and loss account. Debit nominal account in the debit side. Nominal account, debit will be expenses. Credit nominal account in the credit side. Credit nominal accounts will be income. Okay. Well, you started with the gross profit. You added all the income. You reduced all the expenses. And income will be relatively one or two items only. Predominantly, it will be expenditure only. And finally, you go to your net profit. That's all. Simple like that. This is all about, in a nutshell, you are preparing your profit and loss account, trading account, and profit and loss account. Okay. So, simple way, I ascertained my gross profit. Gross profit is nothing but cost of the goods sold is compared with the sales value, and the difference being my gross profit. Later on, I bring down that gross profit to my profit and loss account, and I add with one or two incidental income, and thereafter I reduce my expenditure. In a systematic way, pick up all the goods related item, or you will be, after doing a few sums, you will be very comfortable, prepare your trading account. Thereafter, left out item in the trial balance will consist of all kinds of accounts. I mean, nominal accounts, personal account, real account. Among that, only nominal accounts you concentrate and pick up all debit nominal accounts in the debit side of a profit and loss account, and all credit nominal accounts in the credit side. And the net result will be your profit. The profit belongs to whom? Business and businessman is different, I told you. Entity concept. Profit belongs to the businessman. He is represented how? Which account? Capital. So profit is transferred to capital account. Okay. So that's all about final account as far as this trading and profit and loss account is concerned. Okay. Now I have to explain you in a very nutshell the other part of the final account. That is nothing but balance sheet. Well, now balance sheet. Balance sheet. This is a rough format of a balance sheet. Balance sheet is prepared on a particular date, not for the year ended, as in the case of a trading or profit and loss account. Hence, it is as at or as on. It may be as at 31st March 2022 or as on 31st March 2022. Right. Liabilities are shown in the left side. Assets are shown in the right side. Having shifted all the nominal account for the purpose of trading and profit and loss account, only real and personal account will now be left out in the trial balance. I repeat, only real and personal accounts will be now left out in the trial balance. These accounts will completely move to a statement called balance sheet. Please note that balance sheet is not an account like trading and profit and loss account. It is just a statement showing the financial position of the business as on a particular date. Mainly, it is prepared at the year end. And items will move from a trial balance to the balance sheet as follows. All the credit items of real and personal accounts have to be shown in the liability side, and all the debit items in the asset side. This is basically done like that. Okay. Capital, which we know is a credit personal account, will be shown like this. Okay. As an end date, along with the net profit and drawings. And the drawings, although is a debit item of the trial balance, the same will be deducted from the capital. If you show an item as a deduction in the liability side, where normally credit items are listed, is as good as this same represents as a debit one, and vice versa. I repeat, if we show an item as a deduction in the liability side, where normally credit items are listed, is as good as the item represent as a debit one, and vice versa. Hence, drawings or net loss will be deducted rather than showing the same in the asset side. Therefore, drawings or drawings related items will be deducted from the capital shown in the liability side. Personal income tax, personal insurance, etc. are part and parcel of the drawings account. In fact, a limited company's balance sheet has to be prepared with a lot of headings and subheadings strictly as prescribed in the Companies Act. Whereas in your case, which is based on a proprietorship balance sheet, headings and subheadings may be dispensed with, at least for this chapter. However, certain order you have to maintain. I'll explain the same in my sharing section. As far as the adjustment entries given below a trial balance are concerned, the thumb rule is that each and every adjustment entry has to appear in two places. Mostly one aspect either in the trading and profit and loss account, and the other being in the balance sheet. I repeat, mostly one aspect either in the trading and profit and loss account, and the other being in the balance sheet. You please remember all these basic steps so that you will be comfortably tallying a balance sheet. Well, to conclude, a tallied trial balance has to necessarily lead to a tallied balance sheet. Okay? A tallied trial balance has to necessarily lead to a tallied balance sheet, provided you are absolutely systematic and you have applied your mind, okay? And no carelessness is there here and there, means it has to compulsorily tally. You have to ensure, you will be able to ensure that, yes, balance sheet is automatically getting tallied. Okay. Well, let me move to the sharing mode now. Well, students, as already mentioned, I need to give you some more details explanation about the final accounts. I'm doing it through this sharing mode. Okay. First, trading account. The direct expenses I just casually mentioned. What is the direct expenses all about? Expenses incurred in bringing the purchased commodity in a saleable state. To put it simply, those purchase related expenses incurred till the goods reach the trading place, and other expenses that may be incurred for making it ready for sale. Okay. Well, sometimes they may give some factory items also. In that case, any factory expense whatsoever has to be taken into the trading account, unless a manufacturing account is separately prepared. Okay. Next, what are the items that comes under direct expenses? Wages. Wages paid to loading and unloading and production of goods. Carriage, inwards or freight, paid for bringing the goods to the factory or place of the business. Manufacturing expenses. Well, if they just mention manufacturing expenses, he can, as it is, take. Suppose they give the following items, that also should be considered as manufacturing expenses and to be considered for including in the direct expenses. Coal, gas, fuel, water, power, factory rent, factory lighting, etc. Okay. Dock charges, that is paid on import of goods. Stores consumed, incurred to keep the machine in perfect condition and include engine oil, cotton waste, grease, etc. Royalty, paid to the owner of a mine or patent for using his right or patent. Production related to royalty only will be taken into the trading account. If they are specific, it is sales related royalty, means you should take into the profit and loss account. Next, profit and loss account. These may be categorized into three: office and administrative expenses category, selling and distribution expenses category, miscellaneous expenses category. Okay. Under office and administrative expenses, salary of office employees, office rent, lighting, postage, printing, legal charges, audit fees, etc., etc. Selling and distribution expenses, advertisement charges, commission, carriage outwards, bad debts, packing charges, etc. Miscellaneous expenses, interest on loan, bank charges, interest on capital, repair charges, depreciation, charity, etc. To put it simply, any item not included either in office and administrative expenses or selling and distribution expenses. Okay. Now, there are some limited items that comes in the credit side of a profit and loss account. Okay, these are all other incomes and gains, such as interest received, dividend received, discount received, rent received, commission earned, etc. Please note that each and every nominal account given in a trial balance has to be compulsorily transferred to the above trading and profit and loss account suitably. Before arriving at the net profit, you should ensure that one. No item of nominal account nature is left untransferred. Okay. Next one is balance sheet. The final one. Left out items in a trial balance will consist of only personal accounts and real accounts. Okay, because we have exhausted all the nominal accounts. These are all either assets or liabilities and transferred to the balance sheet. Liabilities are shown on the left-hand side of the balance sheet and assets on the right-hand side, as already mentioned over the whiteboard. An arithmetically tallied trial balance must necessarily ensure eventually a tallied balance sheet. So this you please keep it in mind. An arithmetically tallied trial balance must necessarily ensure eventually a tallied balance sheet. Well, all the assets will appear in the debit side of a trial balance and all the liabilities will appear in the credit side of a trial balance. These tips will help you. Okay, in case you find you are not able to tally the balance sheet or arrive at the profit or loss as may be given as an answer hint. Well, next one, grouping and marshalling of assets and liabilities. First, grouping. What is meant by grouping? It's very simple. Showing the items of similar nature under a common heading. For example, X, Y, Z, all my sundry debtors. That shows all of them under sundry debtors. Okay. Group them together and show under sundry debtors. Similarly, A, B, C are various creditors. Group them together and show under creditors. That's all. Now, what is meant by marshalling? It is nothing but an arrangement of various assets and liabilities in a proper order under two different ways. Number one, in the order of liquidity, that is most easily convertible into cash. In fact, in your syllabus, you need to know only about this one only. However, the other one is in the order of performance. That's exactly opposite of the first one. For example, goodwill is very difficult to make it in terms of cash. Okay, or in its liquidity is the first one. And cash in hand, of course, most liquid one, that will be the last one under the second method. Whereas cash in hand will be the first one in the first method. Okay. Now, generally, sole proprietors and partnership firms prepare their balance sheet in the order of liquidity. That's what I told you. For your syllabus, that is based on proprietorship balance sheet, you need to be thorough only with the first one. Okay. Next, main headings of a balance sheet. The liability sides, current liabilities, non-current liabilities, reserves, capital, and in the asset side, current assets, long-term investments, non-current assets, etc. Well, you need not show under the respective headings the items. You need not show the headings at all. However, it has to come in this order. I mean, current liabilities item first, followed by non-current liabilities in the liability side. Okay, similarly, current assets items followed by the long-term investments extra in the asset side. However, you should know the definition of each of these headings and the item that needs to be placed under each of these headings you should know so that you will be very comfortable. Current assets. Cash and other assets that can be converted into cash during the usual course of business, and that too within 1 year of the balance sheet. That's the definition. Items are cash itself, of course, it's the most liquid one. Bills receivable, short-term investments, debtors, prepaid expenses, accrued income, closing stock, etc. Next one. Non-current assets. Those assets which are acquired for continuous use and last for many years, such as land and building, land and machinery, motor vehicles, furniture, etc. These fixed assets. Okay. These assets are acquired not with the purpose of selling, but to use them. For example, goods purchased for selling. Okay, so goods is an asset. It will not come here. But all left out goods by way of closing stock is there, it will be a current asset only, right? So here non-current assets predominantly comes for using in the business and not for the purpose of selling them. Okay, right. Next one, long-term investments. Investments in real estate, shares, bonds, mutual funds, etc. And as far as the liability side is concerned, current liabilities. Those liabilities which are expected to be paid within 1 year of the date of balance sheet are termed as current or short-term liabilities. For example, bank overdraft, creditors, bills payable, outstanding expenses, etc. Okay. Next, non-current liabilities. Those liabilities which are not current liabilities, to be very frank. However, those liabilities which are to be repaid after 1 year or more are termed as non-current liabilities, such as public deposits, long-term loans, debentures, etc. You must be thorough with all these items so that your balance sheet will be perfect. Your presentation of the balance sheet will be perfect. I told you how to go about the final account. First, prepare the trading account, the technical I explained, then profit and loss account, that also explained, and now the balance sheet. Okay, if it in a systematic way, if you do it, certainly you will get a tallied balance sheet and you will be able to marshal the item also. Okay, thank you. Well, students, let me work out a very simple sum for you. Question number 19, page 21.45, 2019 edition of DK Goel. Why I said it is simple? Basically because only a single adjustment entry is there, value of closing stock. Okay. Well, the sum is as follows. Those of you do not have this already, please take it down. Fine. What is your basic observation about this sum? Well, we are not being given a tally trial balance. They just given the list of balances. Okay, that's all. A tally trial balance is missing. So it is better we prepare a tally trial balance at the outset so that we will be very comfortable in preparing our final account. So I have prepared one for you. Okay. This is a tally trial balance, right? Total is this one. So how did I prepare it? What is the technique I adopted? A simple one. Each and every expense and asset will come in the debit side of the trial balance. I repeat, each and every expense and asset has to be placed in the debit side of the trial balance. And each and every income and liability has to appear in the credit side of the trial balance. That's the thumb rule. So easy, right? Basically, you can take it like that. As such, I have prepared a trial balance and I got it tally. Well, I'm not going to pick up each entry and place it in the appropriate section. I mean, the trading account, profit and loss account, and balance sheet. What I have done is that I have colored it. Different colors have been given for the trading account, profit and loss account, and balance sheet. This one for trading account, and this one for profit and loss account, and this very white one for balance sheet. Okay? And having given such elaborate lecture on the final accounts using my whiteboard as well as in the sharing mode, I'm pretty sure you are very clear about it. Okay? So only that principle only I have adapted here. Well, now let me prepare the trading and profit and loss account first. All goods related items, as I already explained, have been placed in the trading account. Of course, purchases as well as the sales have been subject to retains. Retain outward has been deducted from purchase and retain inward has been deducted from sales. All other items you can check. You can check with the question. I'm sure you have the question readily available at your end by this time. Fine. Next one, I brought down my gross profit here. Okay. And other nominal accounts I have reflected it here. As such, I arrived, I mean, net profit. This one. How did I get it? Total the heavier side, put it here, and difference is this side means naturally it's a profit because credit side is more to the extent of 32,450. So now let me check whether this section is okay. 61,800 and 32,450 as per the other. Is it okay? Yeah, it's very much okay. So that is also done. Why I have shown here this trade expenses in red is most of my students have made the mistake of showing the trade expenses within trading account. Please don't do that. Trade expense, just because the very trade is there, it doesn't mean we have to accommodate it under trading account. It's very much a sales related expense only, hence it has to come in the profit and loss account. Okay? And see, trading and profit and loss account for the year ending 31st March 2017, right? Okay. So these are all accounts, debted to and credited by. Having ascertained a net profit, I am in the process of preparing my balance sheet. I have ensured that order, right? Whatever marshalling I have told you. Okay, I have ensured it here. Well, capital, how much was my capital? 1,37,450. And what has been my drawings? They are not clearly mentioned anywhere drawings. Life insurance premium they have shown. That is my drawings. 6,000. Okay, it's a drawings related item, so it is a drawings that has been taken here. Net profit, of course, we have arrived at 32,450. Fine. So this is my latest capital, and this stands tallied. Here also I have ensured marshalling. Well, this is a very plain, simple sum. The purpose is to ensure that you have mastered the technique of tallying a balance sheet. Okay. So students, thank you. Thanks for being with me for such a long time. Take care of yourself. See you soon.